Hello, everyone. Ladislas Maurice from thewanderinginvestor.com. So today I'm really happy to be with Lobo, who is known as the expert speculator with regards to mining. How are you, Lobo?
I'm just fine. And hello again to the audience. It's been about a year, so it's an interesting time for an update.
Yeah, exactly. So what I propose is that we look back into your views last year, how things unfolded, and then what your thoughts are for 2022. So we'll start off with gold and silver and then go into uranium, which is particularly exciting. So last year in January, when we were chatting, you were very bullish gold. Back then, we were about 18.50 an ounce. Right now, we're at 18.20. So it's been essentially flat. The GDX, which is the ETF for gold miners, has been down 11%. So what happened? What went wrong? And how do you feel about 2022 for gold?
First off, I would separate gold from gold stocks. And as you just pointed out, the performance there is quite different. And even though in this particular case, the gold stock performance is negative compared to gold, that actually underscores the point for owning them. And that is that they offer leverage to the prices. So if gold goes up, the gold stocks tend to go up by a higher multiple. If they go down, they tend to go down by a higher multiple. So in that sense, it was perfectly normal, but it was actually quite exaggerated. But set that aside we'll come back to that. The point though is that if you do ever become bullish on gold or silver or any metal, the reason for speculating on the stocks related to those commodities is because they tend to go up much more than the underlying commodity. So that relationship is intact and it's important, and it can be the right time, vehicle for making lots of money. As far as what went wrong though, I'd actually push back a little, because the reason for gold ownership is safe haven. And given the volatility, given the unknowns, nobody knew what was going to happen in 2021, whether the pandemic would get worse or better, or the shutdowns would stop the engine of the world again and more thoroughly. Nobody could really know. So owning something that did nothing, that went flat over the year as a safe haven, I think that's actually not problematical at all. The reason for owning gold or silver, bullion in particular, the metals themselves, is not speculation. It's not even investing. I don't consider gold or silver physically in your possession to be an investment. I consider it savings. I consider it a rainy day fund. I have personally had experience in my life, Ladislas, where everything went wrong. The job went away, the savings are gone. I'm stuck in the wrong country. Total disaster life. And what saved me and enabled me to feed my family was a stack of silver coins. That's the reason for owning the world's longest and most reliable safe haven assets. That there are price movements that you can speculate on with leverage through the stocks, that's another aspect, which is a good thing to know. So I don't think anything really went wrong last year at all. The fact that the stocks sold off much more is actually an opportunity. The bearish sentiment, I think, is really unreasonable. I mean, think about it. In 2011, gold hit an 1800 price level briefly on its way up to that 1900 spike and then back down again. This lasted a matter of days. So at not just current metals prices, but these terrible, underperforming gold and silver prices that we've had over the last year, the better companies with mines that were designed at $1,300, $1,400, or $1,500 gold price equivalents, they're gushing cash. This is a good business. The mining business itself does really well at current prices, at least for the the quality companies out there. So again, I don't see anything's wrong here. And the fact that the prices of their shares are on sale while the businesses are doing great, that's an opportunity for anybody who missed it before or didn't buy in before. I see that as an opportunity. Now, people say, "Oh, you're making excuses, Lobo. Gold inflation's up and gold didn't go up. Something's wrong." Well, several answers to that. One is gold is up. I mean, okay, it is down like 1% over the last year, 1 point something, but it's up over the last 5 years. It's up over the last 20 years. If you look at the gold price or the gold dollar exchange ratio, since the dollar was separated from gold in 1971, it's a curved X type chart. If you look at the big picture, all these people that say, inflation has nothing to do with gold, it's a archaic, barbarous relic, all that stuff, they're ignoring that big picture. That, and what happens over 1 year is really a very short time frame, especially if you're thinking along the lines of safe haven assets. And I would respectfully suggest to the audience out there, if you're thinking about internationalizing, diversifying your assets, not putting all your eggs in one basket, that's actually the primary way you should be thinking about gold and silver. And one more personal story, I not only have had, my family rescued by my physical savings in bullion. If you stick a couple of gold coins in your pocket, in your jacket, with your keys and quarters and nickels and pennies in, and you go through an airport, it even goes through the metal detector. Nobody sees it. Nobody asks you. That's not illegal at the moment, as long as you don't exceed the OECD declaration limit. I'm just casually mentioning that physical bullion can be a very discreet way to transport significant amounts of wealth across international borders. And that's what it's good for. That's the main reason to get in this space. Now, speculating, as a person wants to make money in this space, speculating the price moves, yes, the timing is important. Last year, 2021, was not the best year. But you know what? I still made money. The companies that make a discovery or build a mine or add value for shareholders in some other way, they still deliver. And so you just look at my public track record. I'm sure you'll link to it, Ladislas. People,
Sure.
They're skeptical. How did you make money in such a terrible year? Just look at the track record. Look at the stocks, that I didn't have any 10 baggers, but I had some big wins because the right stock selection works in a high metal environment.
So if gold was flat in an environment where inflation started skyrocketing, how do you think gold will be impacted by potential tapering and rising interest rates?
Yeah, I get it. So a key point to keep in mind on these shorter term, not the biggest picture, on the shorter term, though, is that gold tends to lead inflation. So people say, what went wrong in 2021? There was high inflation and gold didn't do anything. Well, look at gold in 2020. Why are you ignoring 2020? Gold did fantastically well in 2020 because people could see the inflation coming. People could see the government's opening the easy money floodgates. And anybody with half a brain could tell, that was going to be inflationary. And so it worked, right? Gold did its job. Now we have a situation where here's the inflation, it's here. And people are saying, oh, even though Powell has admitted that transitory maybe, needed to be retired, it's no longer transitory. They're still kind of clinging to that yarn. Well, it's because of these supply shocks. It is still transitory, really. It's peaked. It's going to go away. We've got the tools. We can control inflation. I think most mainstream investors still believe that. Their economic models that their professors taught them tell them that high inflation is a result of an economic boom, and that raising interest rates and cooling the economy will tame that high inflation. They're not taught that it has anything to do with money printing at all. So I think a lot of people believe that, and what needs to happen is a new expectation going forward. And I think that's starting to happen, Ladislas. If you look at the inflation expectation numbers, those are really creeping up. And those are not just high, but longer term. They're well above the Fed's so-called symmetrical 2% inflation target. Not well anchored there at all, the way Powell says. I think this is important. So in terms of 2022, I actually do think this is the year where the rock and the hard place of inflation and economy come together on the Fed. The high inflation will demand that the Fed does something. They've talked about it to the degree that they actually try to walk the talk and do what they're talking about. I really think the economy is much more fragile than they are willing to admit, and I think they know that. And so if they actually do administer that tough medicine of cooling the economy to tame inflation, I think that will cause instant pain, and I think they will pivot. I'm not sure they'll go that far. I think they do know that, putting the brakes on an economy that's still receiving shocks from the shutdowns and all the pandemic causes, I think they know that's very dangerous. And that means, and I could be wrong, but this is my expectation, I think they remain behind the curve. I think what they should do to fight inflation, they're going to do too little, too late, and that will keep inflation high. And critically, that will keep real rates high. Or the negative real rates will be still at, historic highs. That puts a floor under gold and silver. And to the degree that those expectations change, and people start saying, holy cow, it's not just not transitory, it's getting worse, they're not controlling it, then I think we see another 2020 style event in gold and silver. Could be wrong. I had thought that we might see that in 2021. They somehow managed to spool the transitory narrative along longer than I thought they could get away with. I don't know why people aren't more skeptical of the powers that be. Perhaps now they will be. But long story short, I'm putting my own money where my mouth is here, Ladislas. I'm investing in this space. I see relatively little downside, given that I'm speculating. This is not tame Main Street investment. I'm speculating here on things that have not happened yet. But given those entrenched negative real rates, I just don't see a lot of downside for gold. These people are saying, oh, it's going back to 1,000 or under. I just don't believe that. And so whereas if it does break out, and it's not far to a new all-time high, nominally at least, but that gets headlines, it gets more people to jump in. That negativity we saw in the stocks compared to the gold price performance last year can then give us leverage to the upside, massive leverage. That's my speculation, Ladislas.
I'm with you on that speculation. My portfolio is hoping that you're right. So let's talk about silver. So silver's been flat essentially since last year. It's been pretty volatile, but overall it's been flat. The silver miners ETF is down approximately 18%, which can be expected because the silver miners are known to be very speculative. Now, I'm a big fan of your newsletter, which I read every week. It comes like clockwork every week at around the same time. I really like it. And you have an interesting theory around a partial decoupling of silver from gold. Can you elaborate a little bit on this?
Sure. I get hate mail for this. I've been dubbed Darth Silver over at the Wall Street Silver crowd over there. Interestingly, the guys who run that are quite rational, and they welcome different voices. But actually, I think the diehard silver bugs who lumped me in with the Antichrist and Jeff Christian and other people like that, I think they're misunderstanding the thesis here. Well, in the first place, it's data-driven. When gold and silver crashed in 2020 with everything else, which often happens in a liquidity squeeze, right? People sell what they can sell. But then as soon as that liquidity crunch passes, they come screaming back. And we saw that with gold, but silver, not so much. After the crash of 2020, gold comes just screaming back and then, goes on a new all-time high. Silver, it follows gold, but stays way lower. The gold-silver ratio hugely increased. And silver never hit a new nominal all-time high after that. In the data, you see the decoupling. And not just big picture, on a day-to-day basis, gold and silver bugs are often, pulling their hair out again because they'll see gold in the green and silver in the red, or the opposite. And they're supposed to be the two monetary metals. Why are they behaving so differently? First things first, you can't ignore the data. Something is going on here. And my theory about that is what's gotten me in hot water with silver bugs. But just understand that we're looking at the data. And if you're going to ignore the data, you are putting yourself in danger as an investor and as a speculator. All of that said, I'm not saying it's the end of silver. I do not subscribe to the theory that silver is now just another industrial metal like palladium or whatever. But the data suggests it's heading in that direction. Now, I do understand that silver is the word for money in many languages around the world. And I do think that in the near term, gold and silver will broadly, even if on the day-to-day noise level, they will broadly move together. Even in this example I'm talking about from 2020, silver did not recover as much as gold, but it did recover with gold. So a scenario, Ladislas, where people lose faith in the Fed's ability to control inflation, or they realize that it's behind the curve and not doing enough, and they decide they want more safe haven assets in their portfolio and they buy gold, I don't foresee that leaving silver out in the cold. Mm-hmm. People buy gold, gold goes up. Some people will buy silver as well. So if you're a gold bull in the year or two ahead, then I think it's a mistake to not be a silver bull as well. And silver being so much more volatile, it does offer more speculative upside. Like I said before, silver hasn't reached a new nominal all-time high. And in all previous bull markets, it has always lagged gold and then more than outperformed gold on a percentage gain basis. So there is extra upside on speculating in silver stocks in particular if you're a gold bull. That's the thesis right now for making money. As far as, the point you're asking about the differences, my thesis is that silver is starting to be regarded more as an industrial metal. And as we look forward, if that accelerates, you could see that the gold silver ratio just basically never goes back to what it was before. It's a different world. They are different metals. They're used in different ways. And just because historically the ratio has been X, that doesn't mean that forever and ever in the future it has to go back to being X. The potential in the far off future, we don't need to spend too much time on this, but if there were a new gold standard, the reason why you had a bimetallic standard before, or trimetallic with silver and copper to make change for gold, because it was hard to make change for even a small gold coin. There was so much value there. But now with digital systems, that's a solved problem. I could easily imagine a future gold standard that you didn't need silver to make change, in which case silver never goes back into circulation as money. If that happens, that would be a permanent change in the gold-silver relationship, and it would be incorrect to assume that gold and silver have to go back to their historic ratios, because the use case would change. Now, this is something for years down the road. It doesn't change our investment thesis now. Right now, I see both monetary metals as a good hedge against what crazy governments are doing all around the world, and I'm bullish on both.
I understand your thesis. Essentially, silver has always been on a spectrum between monetary and industrial. And that spectrum changes a little bit. Sometimes it tilts more towards monetary and at times more towards industrial, but it shifts with time. It makes complete sense. Now, let's discuss uranium. So you were very bullish uranium last January. You were saying it's the most speculative part of your portfolio, but there was that glitter in your eyes when you were discussing uranium, and I think in my eyes as well. And uranium has done great. So the spot price has gone up about 50% from $30 to $45. And the North Shore Global Uranium Mining ETF has gone up 72%. And then some of the juniors have gone 2x, 3x, 4x. It's been quite the party for uranium. So isn't there a risk that 2022 would be the year of consolidation and that the party was last year?
That's a good question. It's funny. I don't know how investable a twinkle in my eye is. How do we measure that, the degree of twinkleosity of Lobo's eyes for an investment thesis? But actually, I would kind of turn that on its head a little bit. I actually think that absent a major nuclear accident, which of course, that's always the thing to get out there first. Uranium, I think, is a fantastic basis for speculation. It's not a safe haven asset. I don't want any uranium under my mattress. Thank you very much. But as a basis for speculation, I think it's fantastic. But you can never forget that if there is another Fukushima, even though really the problem at Fukushima was the tsunami, not the nuclear power, really. If there is an event like that, uranium gets whacked, uranium stocks get whacked, all of these things turn into from big wins to big losses. I mean, you must understand that this is a speculative investment of the highest order and that it can literally blow up on us. Now, these things are not a yearly event. They're not even a once a decade event. They're very rare and we learn from each one. So I do not expect, and I don't think it's reasonable for anybody to expect a major nuclear incident in the investable timeframe over the next year or two. So I set that aside, but I never forget that it's there. That said, I'm actually not just extremely bullish on uranium this year. I actually see it as the best risk reward in the whole commodity space, even better than gold and silver. I'm very bullish, as we just outlined, and I gave you my reasons why, but we're in uncharted waters, Ladislas. I don't know what's going to happen, and nobody knows what's going to happen. And anybody who says they do, I just stop listening. That arrogance, I think, is a dangerous thing to investors' money. So what I'm saying now is that absent this potentially explosive outcome in the nuclear space, the market has changed. What happened in 2021 was a game changer. Now, I didn't predict it. I didn't know that Sprott was going to come along and hoover up all the cheap pounds out there, but that is what happened. I think the market would have done well anyway without that. It was in a solid 5-year trend that continued. And before and after that, It's still intact. But that changed things because it's such a tiny, opaque market. Nobody really knew how much cheap uranium there was out there, and how, if there were some sellers that might just come out and trash the price because they needed cash and sold their uranium stockpile. And even, a Japanese utility that maybe needed money and wasn't going to restart its reactors, something like that. But we now know, those pounds are gone. And even $50 plus uranium, that brought new pounds to the market, but not at low prices such as we saw in previous years. So I think that's an important thing to keep in mind, is that what was unclear before and what was a big potential cliff overhanging the market of, nobody knew how much cheap uranium there was that could flood the market, that has now been cleared up. And on top of that, you still have all the fundamentals there, and they're better than ever. China now has plans for 150 new plants. And, the BRICS countries writ large, they're building gangbusters. And even in Europe, where Germany is shutting down its nuclear plants, Belgium shutting down, the new taxonomy in Europe includes nuclear and gas somehow as green energy. And okay, maybe that's just transitory, but assuming that goes through, which it seems it will, this changes the narrative. And you can see this happening writ large. The number of articles appearing in mainstream media, it's just like this drumbeat getting louder and louder of, oh, you know what? We're not going to reach these climate change goals without nuclear. It's just not possible. The world's not changing fast enough. And after, the experience we had in 2021 with renewables failing Europe and going back not just to more gas, but coal, going back to more coal, I think that failure is a real shock, and that people realize, you can't turn off plan A before plan B is ready. And you do need a bridge to get from A to B. And that nuclear is the best non-carbon emitting way to do that. I think that story is extremely strong. The nuclear renaissance that's happening now has even the Biden administration is pro-advanced nuclear. And never mind all the BRICS. They're less concerned with politically correct nonsense. They need power. They understand that they have a pollution problem, and nuclear is clearly the best answer for them. So the fundamentals are strong as ever. The danger to the market of the opacity and the unknown amount of cheap uranium that could keep prices down that we faced before is now gone. So to me, the risk reward in this space is spectacular. And unlike, say, copper, which I love copper too, but it's not cheap, right? It's at historically high levels. Gold, even though it had a terrible year in 2021 that people were, moaning and pulling their hair out, it's still at historically high levels. 1,800 is a fantastic price for the mining business. But you know what? $40 to $45, that's not a good price for uranium. Only Kazakhstan and maybe a few others can make money at these prices. So uranium is necessary. It's becoming increasingly accepted. The cheap secondary supply that was holding the market down is gone, and you still can't mine it at current prices profitably, not enough to supply the industry, which is seeing increasing demand. I mean, this is a perfect setup, absent the one explosive possibility in the commodity space. This is still a buy low, sell high environment. And the best thing is, for anybody that didn't catch that twinkle last year, Ladislas, is that the retreat from plus 50 to plus 40 in the uranium prices has had that leverage effect on the stocks. And many of them are on sale at much better prices than they were just a few months ago. And okay, I can't say they're cheap compared to where they were a couple of years ago, but I'm saying the market has changed. In this different marketplace, for anybody who has no uranium in their portfolio at all, I think that correction in the stocks is an opportunity.
Yeah, and add to this the gradual Japanese restarts as well. Everywhere I look when it comes to uranium, I just see positive catalysts.
Well, occasionally there is some pushback. It's interesting. There's actually a debate now about whether or not California should shut down Diablo Canyon, its last nuclear power plant, which supplies a large chunk of California's power. And people are saying, "Oh, you know what? We're burning more fossil fuels, and we're thinking about shutting down this non-carbon emitting plant." And you're starting to see that, but there's still pushback. There's so much fear out there that it's still there. But I guess what I'm saying, though, is that it's changed. I mean, there wasn't a debate before about Diablo. It was going to be shut down. And now you're seeing op-eds in, San Francisco Chronicle, the major newspapers in California are running editorials about, what? Maybe we shouldn't pull the plug on this quite yet. We're not ready.
And people are a little biased by Western media because, sure, there are all these debates around a single nuclear plant in California. But in the big scheme of things, when you've got China, like you said, having plans to build 150 of those, it's actually relatively immaterial in the big scheme of things.
Let me push back a little bit on that, Ladislas, because California is such a bellwether. I mean, that's where they make the movies, right? And people look to California as an example within the United States and around the world. I think that's kind of looking at the insane asylum for an example. But anyway, if California extends the life of Diablo Canyon, even by just 5 or 10 years, while we build more windmills or whatever, I think people will go, wow, if California is willing to give a reprieve to nuclear energy, maybe we should too. I do think that's important. Big picture, you're right. China building 150 plants, you're going to spend $500 billion on this. That is huge compared to whether one little plant in California stays on or not. But in terms of the psychology of the marketplace and the acceptance of the idea and this new renaissance, I actually think it would be a very strong positive for California to extend that. And I don't know what the odds are. And I wouldn't believe anybody who said they did know. I don't know what the odds are, but I think they're pretty good. I think people don't like paying high power bills. I think there's a constituency now for keeping that plant going, at least temporarily, that wasn't there before. And that's meaningful.
Lobo, thank you very much. So I'm really a big fan of your free newsletter that comes out every week. There is a link below for people who would like to subscribe. I've been a member as well of one of your private services that I pay for on a monthly basis. It essentially, you have reviewed with your team, hundreds of mining companies by now, and you put your analysis. And for me, it's very useful as an active mining investor / speculator. I do my own research, and then I'm always happy to log on to the website and to see what your opinion is of that mine. And sometimes it helps me see things that I missed, and it prevents me from making expensive mistakes. So I've gotten my ROI multiple times over thanks to your service. So I really recommend people sign up.
Thank you for that. Let me just say 2 things real quick about the free service. People have probably stopped listening already. They know this is the end of the interview, but if you're still here, I just want to reassure you that if you sign up for that, we will not spam the heck out of you with daily advertisements. Ladislas can testify to this. It's a free weekly digest. And obviously, I hope to persuade you to subscribe to one of my paid services. But I don't, bash you over the head with a flood of advertising. I don't spam readers. So that's my promise to anybody who does that. And on the service that you're talking about, Ladislas, the My Take service, it does cover about 500 companies so far. It does take a team effort. And, I want to be clear here. I don't pretend to be able to get 500 companies' price trajectories right. It would take a deity to be able to do that. And that's not me, even with a team. What I do claim is that I work for you, the reader, not the companies. This isn't paid promotion. I'm not paid to give a thumbs up or a thumbs down. This is my sincere opinion based on my 20 years of experience kicking rocks and looking at mines. And, I'm not always right, but at least I'm always unbiased and I'm on your side. And I'm giving you my honest opinion based on my experience. This is what I see. This is what I think the odds are of success in this space. That's what I promise to deliver.
Yeah. And just to make things clear, you don't just look at gold, silver, and uranium, but you also look at copper, nickel, all of the other commodities out there, including some of the smaller oil companies as well. Great. Lobo, thank you very much, and all the best for 2022.
Thank you. You too.
Cheers.
And to you, the audience.